We all know that Bitcoin and the crypto markets are highly correlated to the stock market. This very simple video explores one very simple question. What happens to Bitcoin and crypto if the stock market continues to fall? What is up, everyone? Welcome to Crypto Capital Venture. Thank you for coming by. Hit the subscribe and like on the way in. Let's jump into the video. This is the S&P 500 index that we have on the screen. It's a weekly chart. You get a really good glimpse of the market. You get a good glimpse just by staring at this screen based on historical context and data, what could potentially happen in the state that we're in right now, not only as a country, but the global state, right, of the world right now. And it shouldn't be such a controversy to explore what we're about to explore in this video. The stock market, the S&P 500 index, for instance, here continues to fall. What happens to Bitcoin? How low could it go? Bitcoin is not immune to huge dips. In fact, we know the opposite is true. And we have clear data on the screen, and I want to dig into that. So I want to take two charts, very simple, the weekly zoomed out S&P 500 index and the weekly zoomed out Bitcoin charts. Before we do, real quick, I just came across this article which spurred the idea just to do this quick video because you all know I'm very bullish on Bitcoin and crypto. I'm long. I've been accumulating crypto lately. I've been accumulating, even with this potential, right? Trying to manage, hey, what am I going to leave on the side fiat-wise in case something like this happens? So I'm balancing it all. This is why I'm tracking these things, and this is why I'm doing these videos, so that we can track it all. This isn't financial advice. This is data, and I'm just trying to be prepared for all scenarios. I think there's wisdom there, and I think we can support each other in doing that. So this was just and this is your typical headline, right? This happens all the time. Morgan Stanley warns a potential bear market in U.S. stocks, but there's some good points I want to point out. And I want to start down here, actually. Some economists are hopeful that inflation may finally be at or near a peak, right? Sounds like a good thing. Morgan Stanley shares that view, although the bank doesn't see that as a positive. Instead, Morgan Stanley says easing inflation will be accompanied by slower GDP, sales, and earnings growth, all negatives for stocks. While others have been using this as a bullish argument, Morgan Stanley wrote, "We would like to send a clear warning, be careful what you wish for." So this is what I love about this. This is so conflicting. Analysts on both sides, bullish, bearish, at the end of the day, nobody knows. I sit here, I'm doing a YouTube video, we're talking about this, we're discussing this. There's going to be people that comment on this video just by looking at the title, not watching the content. But at the end of the day, nobody knows. And it's kind of amusing to read these articles. And if you really dig into the details, nobody knows. But what we do know is there are two scenarios. And there's a scenario that lies in here where GDP is slowing, right? Earnings growth is bad, is negative for stocks and companies. And the stock market continues to fall. And so in a world like that, what happens next, right? And this article, by the way, is signaling a 20% decline from previous highs. So if we go over to the S&P 500 index, let's just kind of get a glimpse of what that would look like. So a previous high right here, if we want to take this swing high, and this is on the weekly chart, 20% to the downside would be, the 3,600 area. I imagine if S&P 500 index does continue to fall into this vicinity, this 200-week moving average would slowly would slowly get pulled into that, right? I don't think it would be just a one-week boom. I think it could be a trickle-down effect. And then if we actually take 20% from the actual all-time high, we can see it's around 3,800. So the similar is true there. The 200-week moving average being probably pulled up into that. Maybe there's consolidation sideways. So this is a very bad case scenario for crypto or for the stock market that could translate to crypto markets. And so let's visualize it. We've seen these corrections over and over on this chart, the S&P 500 index. You just zoom out. We've seen these corrections. Now, COVID correction is right here. It's kind of an outlier. We're going to kind of we don't want to use that. We can X that out. So just kind of get that off the radar screen. But if you go back to this last correction, this was in October, swing high, to a December 2018 swing low, to the 20-week moving average or I'm sorry, the 200-week moving average, guess what? When this happened, Bitcoin at that time did what we've been talking about. We've been viewing this area because this entire consolidation that we're seeing here has reminded me a lot of the consolidation that we're seeing here. And you know what happened? This is November 2018 into December 2018, Bitcoin just falling. And if we really look back, it's correlated to S&P 500, correlated to traditional markets. October to December, stock markets were falling, right? So here's October. Where's October? To December, crypto was falling. And that's a more dramatic fall for crypto. This is Bitcoin falling away from the 20 moving average to the 200 moving average on the weekly, a 52% dip. Now, if we go and we say, okay, if the stock market does something similar to what it did back in 2018, and this correction continues to the downside, right? If this happens, and it's possible, and we have to explore this, what will Bitcoin do? And we go over here to a Bitcoin chart, and I should actually, right now, this is the Brave New Coin Liquid Index. I should use just a regular Bitcoin chart so that we can get a real time. That was a day behind. So here's the real chart. If we get this dip for Bitcoin down to a similar 200-week moving average, that's a 44% dip. That's in play for Bitcoin. I think what's more relevant on this chart are these Fibonacci's that I've charted. And this is a chart I charted all the way back in the bottom of the bear market, 2018. This is what the chart looks like. It is based off of these Fibonacci's. You see these yellow lines? These are very important yellow lines. So when I charted this and I had this correction coming back down to that yellow line, potentially, it's speculative, extremely speculative, being as I did it almost 4 years ago, 3.5 years ago. That yellow line is the last bear market swing low to wherever the bull market high would be, right? So speculatively, I put it around 90,000, but let's bring it down a little bit. And you can see from the previous swing high, here's a 786 line. It is the 786 line. That's what these yellow lines are on this Bitcoin chart. So for context, if we go back to the actual 2015 bear market low to the 2017 bull market high, you can see there's the 786 of this retracement. And you can see this is when Bitcoin fell into that 786 and below it to the 200-week moving average. This is the heavy buy zone. So it's all in play for Bitcoin right now to happen again. And by the way, it happened not just in that last cycle, but it happened all the way back here as well. The 786 line of a Fibonacci from swing low to swing high down to the Fibonacci accumulation zone. So will that happen again? If it does, it will likely be triggered by stock markets continuing to fall. And Bitcoin is in a very, very volatile and vulnerable area on these charts. This is a downside scenario video. It's just foolish not to talk about these things. It's so unpopular. It's so, especially in the state of crypto sentiment and crypto social media, it's so unpopular to talk about these things. But the downside potential is there, and so we have what this long-term Fibonacci charts at a 27,618, right? To the 786, 16 to 17,000. Now, here is, on this chart, this is the Brave New Coin Liquid Index, so it is a day behind. But there's that 786 I charted all the way back in 2018. And we know for context that it's a little lower than that. And actually, let me just go to the other chart. So here's a live view of the Fibonacci on the weekly chart for Bitcoin. So the 786 actually lying around 1714 or 17.4, and 28,719 is the 618. So this entire area is up for grabs for Bitcoin, is in play. The 200-week moving average around 21,000. Maybe that's where it retraces to this time. This has been more sideways consolidation as opposed to downside consolidation like we saw in 2017 to 2018. Needless to say, it is there. It is available. We have to keep an eye on traditional markets and what they're doing. It's down today, obviously, so I thought the articles are bearish. why not do a video talking about the bearish potential? Maybe it all turns around and we get a bounce to the upside. What I do know, just glancing at this S&P 500 index chart, is if you look at this, this is a weekly. We have this 20-week moving average getting ready to cross below the 50-week moving average. This chart really needs to get a bounce very soon to see if the 20-week moving average can just kind of bounce off of that 50-week moving average for another leg up. That's essentially what we need to see, not only traditional markets, but crypto markets, because here's the COVID 20-week moving average cross below the 50, and here is that 2018 20-week moving average cross below the 50-week moving average before, boom, getting that bounce. So is there a capitulation type of thing in play for the stock market? How will it translate on Bitcoin? I believe Bitcoin will be falling into this range somewhere. This is, at the end of the day, actually not a bearish video. If you zoom out on this chart, a move like that would be commonplace for Bitcoin. A move like that would be an opportunity that only comes around every couple of years, every few years or so. This would be an amazing opportunity for many people that have not gotten into crypto yet. So it is a video that many people don't want to talk about. It's a chart that many people don't want to look at. However, it's a chart of opportunity, right? It's a chart of capitulation. It's a chart of fear. And oftentimes, most times, that is where the opportunity is. So we know it's in play. Be prepared for it is all I'm saying. Let's continue to talk about it. Not every day. We don't have to be bearish because we're not bearish on the macro. But this is what it is. Let me know your thoughts below. I appreciate you. I'll see you in the next video. Hit that like button on the way out. God bless.